President Donald Trump has often hailed his economic policies as the dawn of a golden age for America, promising to make America wealthy again. But is this vision of prosperity holding up, or is the U.S. economy teetering on the edge of a troubling downturn? Today, we're diving into the state of the U.S. economy in 2025 under Trump's leadership. We'll explore recent data, expert opinions, and the real-world impacts to see if this economic bubble is about to burst. Since taking office in January 2025, President Trump has painted an optimistic picture of the economy. He's promised a golden age through aggressive trade policies, like a 145% tariff on Chinese goods, and deregulation to boost American businesses. But these bold moves come with risks, and not everyone is convinced they're paying off. Trump has even tried to deflect criticism by blaming his predecessor, Joe Biden, for economic challenges. Yet, the data tells a different story, one that's raising eyebrows among economists and everyday Americans alike. Let's start with the numbers. According to the Bureau of Economic Analysis, the U.S. economy shrank by 0.3% in the first quarter of 2025. That's a sharp drop from the 2.4% growth in the last quarter of 2024. Why the contraction? A massive 51% surge in goods imports played a big role. Businesses rushed to stockpile products before Trump's tariffs kicked in, creating a temporary boost that masked deeper weaknesses. Consumer spending grew by 1.8%, and business investment jumped 22%, but these weren't enough to keep the economy in positive territory. This GDP report landed like a thunderbolt during Trump's first 100 days, challenging his image as a master businessman. Some economists warn that the second quarter could be even tougher as the stockpiling effect fades. At the heart of Trump's strategy are his trade policies, especially the hefty 145% tariff on Chinese imports, announced on April 2, dubbed Liberation Day. These tariffs aim to protect American jobs, but they're driving up costs for businesses and consumers. Trump himself has admitted the trade-off, warning that Americans might see $2 instead of $30 on store shelves due to higher prices. From toys to electronics, the cost of everyday goods is climbing. Inflation, which was 2.4% in March 2025, could hit 4% by year-end, according to forecasts from Capital Economics and Vanguard Group. This would double the Federal Reserve's 2% target, potentially forcing interest rate hikes that could slow the economy further. Despite these challenges, there's a silver lining. The labor market is holding strong. The Bureau of Labor Statistics reports that the unemployment rate stayed at 4.2% in April, with 177,000 jobs added. From healthcare to transportation, job growth continues. This resilience is a bright spot, showing that American workers are still in demand. But with inflation creeping up, many are feeling the pinch at the grocery store and gas pump. The stock market has been a roller coaster. The S&P 500 dipped to 490.57 in early April but climbed to 566.76 by May 2, a recovery from 536.38 a month earlier. The Dow Jones followed a similar path, rising to 413.04. While these gains are encouraging, they don't tell the whole story. American economic confidence has plummeted to its lowest level in 13 years. This lack of trust could curb spending and investment, creating a self-fulfilling prophecy of economic slowdown. Former Treasury Secretary Larry Summers didn't mince words, calling Trump's first 100 days the least successful on the economy in history. He points to a volatile stock market, a weakening dollar, and collapsing consumer confidence. Internationally, Trump's sliding approval ratings could weaken his hand in trade talks. Dozens of countries are scrambling to avoid his tariffs, which could disrupt global commerce. Yet, not all experts are pessimistic. Some, like those at Goldman Sachs, argue that the economy's fundamentals remain solid, and the GDP dip is a temporary blip caused by stockpiling. This divide highlights the uncertainty surrounding Trump's policies. Looking forward, forecasts paint a cautious picture. S&P Global Ratings predicts GDP growth will slow to 1.9% in 2025 and 2026. Down from 2.8% in 2024. The World Economic Forum notes that while global trade may grow, protectionism could reshape patterns, favoring services over goods. With inflation expected to rise, the Federal Reserve faces a tough choice: raise rates and risk stifling growth, or hold steady and let prices climb. Meanwhile, Trump's plans for tax cuts and deregulation could offer a boost, but their impact may be overshadowed by tariff-related costs. For now, the U.S. economy is at a crossroads. While Trump touts a vision of prosperity, the data reveals cracks in the foundation. Higher costs, slower growth, and global trade tensions could challenge his narrative in the months ahead. In summary, President Trump's economic bubble of unreality is showing signs of strain. The GDP contraction, rising inflation risks, and shaken public confidence paint a picture far from the golden age he promised. Yet, a strong labor market and some optimistic forecasts offer hope that the economy can weather the storm. Will Trump's policies lead to a deeper downturn, or can they steer the economy back to growth? That's the question facing America today. Share your thoughts in the comments, and don't forget to like and subscribe for more insights into the issues shaping our world.